Hello, welcome along to this keynote interview at today's event. My name is Katie Martin. I'm the markets editor at the FT, and I'm happy to say I'm joined by Joe Johnson. Hi, Joe.
Hi, Katie. Nice to be here.
Yeah, and sorry we're not in Luxembourg, but the situation is what it is.
We'll be back.
We will. So Joe is a politician, author and journalist. He's also done a stint in investment banking. He was previously the Minister for Universities, Science and Innovation and was the Conservative MP for Orpington until 2019. And he writes for the FT, so that's got to be good for your credentials. So we've got time to kind of crash through a lot of issues here, quite a wide-ranging discussion about the situation in which we find ourselves. But to kick off, we're a few weeks now into life after the EU for the UK. What are your impressions of how that's going for the country and economy as a whole, but also for the city?
Well, look, I mean, we've started the year on a slightly bumpy note in terms of, obviously, the virus is still very much with us and causing chaos as it did last year. But the relationship has got off to a little bit of a bumpy start as well between the UK and the rest of the European Union. There's been a return of something of the nationalism that we saw at the beginning of the coronavirus crisis around the protective equipment. We're now seeing it again over access to vaccines. This is sort of colouring the relationship and giving it a rather acrimonious and combative feel, which it wasn't exactly what we were all looking for. And I think that is slightly to be regretted. And of course, will have a big impact on the appetite on both sides to get down to work and put in place a long-term basis for a relationship between the City of London and financial centres across the European Union, mediated by Brussels. So the backdrop to the start of this year hasn't been totally helpful, I would say.
Now, a lot of parts of UK manufacturing and the export industry have found themselves coming across red tape that they weren't really expecting, but the city was expecting red tape. It had taken lots of kind of measures to mitigate the impact, but nonetheless, it is interesting that a lot of those fallback measures were activated effectively on day one of trading in 2020. We saw obviously EU share trading leaving London very quickly. We're seeing the same with certain interest rate derivatives and all that kind of thing. Especially given the situation you were just talking about, how strong do you think the appetite is for equivalence between the city and the EU financial services?
Well, this has been a question on which opinion has shifted quite significantly over time. Look, I mean, let's just pan back a bit. Obviously, the financial services industry is hugely important for the UK, contributes about 10% of UK GDP, so massive sector for us as an economy, employs almost 2.5 million people. And these jobs are spread throughout the country. There's often a perception that it's just London that's at stake. And London is never, at the top of politicians' list of concerns. But these are jobs which 2/3 are outside of London. So it's of huge significance. And getting a settlement, you would have thought in that context that looked out for the interests of the financial services industry, you would have thought would have been very high up the list of political priorities in this whole period of negotiations following the referendum in June 2016. In fact, quite the contrary. The voice of the city, the voice of the financial services industry has been relatively silent throughout this whole process. And as a result, we've got in the EU-UK Trade and Cooperation Agreement of December the 24th, 2020, which came into effect on the 1st of January this year, we've got an agreement that is basically not very far off no deal for the financial services industry. The implications for the industry are much more severe for financial services than they are for trade as a whole. And this is inevitably going to mean that the role of London as the main hub of the EU's financial market is going to change. And as you've said, we're already starting to see some of that shift. the shift of EU share trading and certain other activities. So London is, to some extent, in a fight for its future. Now, it really is going to depend on how long this sort of uncertainty drags on over when the EU and if the EU grants equivalence to more areas of financial services activity than it presently has done. That will really shape, I think, how close a relationship the EU and London are going to have in future. Because my sense is that the EU at the moment is being very clear that it wants to kick the city around a bit. Throughout these negotiations, it has dragged its feet on equivalence, saying, well, we want to see how the UK uses its new freedoms to diverge in a regulatory sense, and we're going to be very cautious in granting equivalence until we've seen more of how the UK is going to handle these powers. And so far, we've only got equivalence in relatively limited domains relating to central counterparty clearers and so on. In the vast bulk of activities, we're in a situation where we're pretty much back to no deal or falling back on bilateral country by country arrangements that the UK can put in place. And the government's been very clear that the status quo doesn't go as far as we would like with the EU. And there is another deadline of the 31st of March looming for the two parties to make good on this memorandum of understanding, which we agreed, to put in place a framework for deciding how equivalence was going to work in practice. So businesses and financial firms could have certainty around what equivalence would mean in the event that the EU were minded to grant it in more areas than it has done at the moment. But my feeling is that the longer this whole process drags on, the more likely it is that the UK is going to end up diverging and looking for more and more opportunities to demonstrate the benefits of Brexit for financial services. And as you said, we've already seen some EU share trading go back to continental European centres. We are seeing the UK actively looking to strike agreements with other countries that will enable it to present a picture of Britain benefiting from Brexit. And at the heart of that have been things like the deals with Switzerland to enable us to start trading Swiss shares, and reciprocally for Switzerland to start trading UK shares. And I saw the other day that Rishi Sunak has started upon a much broader discussion with the Swiss about a much broader financial agreement. And those are the kinds of things which are going to start to become inevitably things which occupy the government in the absence of quick deals on equivalence that would enable us to maintain more of the status quo. We're going to do more Swiss-style deals. We're going to look for further areas where the UK can diverge. And as you know, we've currently got two massive reviews underway that could signal quite significant changes to how UK financial services are regulated, relating to listings with the Jonathan Hill review and the whole fintech sector with the review being conducted by Ron Khalifa, both of which are at the point of being released or shortly to be released. So these are hugely significant moments. And my feeling, as I said, is the longer Brussels makes clear that it wants to kick the City of London around, the more likely it is that the UK will just go, well, fine, well, we're going to seek more of these areas to diverge and to develop our relations.
I think it is certainly a reasonable observation that the EU wants it, does want to kick the city around to a certain extent, and does want to create a hub or hubs of financial excellence, if you like, across the EU. And that's kind of not unreasonable, really. But particularly with the Swiss deal that you bring up, that was very much a signal from the UK very early on that we're going to do things our way, we're going to do things differently. Isn't there an argument that, there is kind of, animosity isn't quite the word, but there's an awkwardness on both sides here that we're both trying to send signals that we want to do things differently?
Yes, I think for a very influential group in government and in Parliament, the ability of the city to diverge is really one of the litmus tests of Brexit. It really is going to be a test case for whether net this is a sort of geostrategic move that makes sense for the UK economy. And I think there is a lot of focus in the Treasury and across government on looking carefully at financial services, at all aspects of it, and seeing whether there aren't these kinds of areas. Obviously, the Swiss deal was particularly, ripe for the picking, given that it was a situation which had been created by the EU in response to the difficulties they'd had in their negotiations with Switzerland. It was ripe for the picking. But there are other opportunities which members of the government are really, really interested in. I mean, to have the Treasury so early on in this Parliament, launching these two big reviews into fintech and listings really tells you a lot about the appetite for opportunities to demonstrate the benefits of Brexit for financial services. And I think across government and across Parliament, there is this sort of sense that, all of the warnings that were issued in the period 2016, 2017, 2018, that London's position would be diminished by Brexit, and that we would see a sort of a parceling out across European financial capitals of London's position. They haven't been borne out by events, by and large. The bits of business that have left London have fragmented across Europe to Amsterdam, Brussels, Frankfurt, Paris, Dublin, and haven't really clustered around a single alternative location, which has, I think, confirmed a general sense in the Treasury and in our financial services policy-making community that our real competition is in American financial hubs and in Asian financial hubs rather than in Europe, and that our duty for the long-term good of the city is to look carefully at that global competition and to ensure that we've got the regulatory framework and nimbleness and flexibility to enable us to find our place in that sort of architecture, rather than trying to ensure that we're compatible with the rules and regulations devised in Brussels. So that I fear is what's happened as a result of the rather smaller than expected departures of key personnel and business lines to other European centres than we had been led to expect back in 2016, 2017.
I mean, as you say, what we're not seeing right now is like the opposite of a big bang, a big implosion, if you like. We're not seeing queues and queues of, shiny suited investment bankers queuing up at Heathrow Airport and leaving en masse. But what we are seeing is with these pockets of the city that are heading elsewhere, it feels a little like death by a thousand cuts. And as you mentioned, the city is a huge contributor to the UK economy. When we get to the point where we're writing history books on how this all happened, what do you think the judgment will be around why the city's voice wasn't louder beforehand? How did we get to this point?
Well, that's a fascinating question, Katie. And I think, to my mind, the answer to that is, you've got to go for a big part of the explanation back to the global financial crisis, where the city lost its social license to operate. The financial services industry lost its social license to operate because, there were financial products that were packaged up and sold wrongly. And then, the financial system exploded. Governments had to bail out the banks. Governments then didn't have the wherewithal financially to provide the social support that was created to help solve the economic crisis that followed. So banks created the problem, led governments to indebt themselves in the bailouts, and then diminished government's capacity to respond to the social challenges that followed. And a big part of that is, and a big part of the anger was obviously also that there was this sense of impunity, that people weren't held to account, that the banking community wasn't really answerable for the chaos that ensued from the financial crisis, and that life just carried on more or less as usual, while the tax-paying public got shafted. So I think a big part of that, has to go back to the financial crisis and their loss of legitimacy as a big player in our economy. Obviously, that's hugely unfair, given that this is a very big industry in the UK, employing 2 million people all over the country, only a tiny number of whom may have indulged in the kinds of activities that blew up Lehman and Bear Stearns and RBS and HBOS. Nonetheless, it has tarnished the sector, and I think did diminish its voice in public policy debates. I think that's only part of it, though, to be honest. The bigger reason is that the EU took a very clear decision early on in the negotiations that if the UK wasn't going to accept freedom of movement, then it wasn't going to have full access to the single market, and it would not have passporting for our financial services industry. And because freedom of movement was ending freedom of movement was such a clear red line for the Theresa May administration and for the advocates of Brexit within the Conservative Party, that ended that chapter of discussion almost immediately. Passporting went out the window almost on day one, I would say. We then spent a lot of time going for a distant second best of equivalence. And as the conception of Brexit hardened over the years to one in which sovereignty became the primary definition of what a good Brexit looked like, then even equivalence went out of the window too, because what became paramount for successive British governments and ultimately for this government was the ability to say we are totally sovereign. There is no role for the ECJ, no role for European regulation and in how we do anything. So at that point, equivalence kind of largely went out of the window too. And that's why we are where we are.
So let's talk about kind of skills and immigration, right? That's something that I know you feel very passionately about. The city in London thrives on the fact that it's full of Polish bankers and French bankers and German bankers, and it's a real kind of melting pot. That's an important part of the skill set, really, for London. How does that work now, and is that effectively lost to us?
Look, I think this government is acutely aware of the need to have a good pipeline of talent into the UK economy, without which we're not going to be successful as a knowledge economy, nor as a financial services centre. I'm encouraged by, obviously ending freedom of movement is a major impediment to our ability to access talent, to our ability to maintain London's position as a financial hub. There's absolutely no doubt about that. But I am encouraged by what the government is doing to mitigate that. So created a new office for talent at the centre of government in number 10 to take a more strategic view about how we can ensure that we're getting what we call the brightest and the best. It's not a term I love, but it's a term government uses endlessly. How we can ensure we get brilliant people into the country. And I'm really encouraged by, some of the recommendations that I think will come out of the things like the Ron Khalifa review into fintech, how to ensure we get, really brilliant people who are going to drive forward that part of our financial services industry, thinking of the UK as the place they want to come to set up a fintech enterprise, bring their families in, bring dependents in, and so forth. So the government is, acutely aware of the need to have a strong talent pipeline. In other areas too, you can see it. So, for example, one of the first things that this government did was to bring in something called the post-study work visa. Now, this might sound very, might sound technical, but it's actually of critical importance to ensuring that we get a strong pipeline of clever people coming to study in the UK with a view to staying on after they graduate, working and contributing to the UK economy. Other countries that offered the post-study work visa before we did saw a huge success in attracting those flows of students. And the UK, for several years after 2012, when Theresa May mistakenly got rid of this post-study work visa right, took a lot of market share from the UK in these flows of post-grad students. Happily, this government has reintroduced it back in 2019. And as a result, the UK university system is really regaining that market share rapidly. And this is so important because these are the people who start up roughly half of all new startups. They come through this route into the UK. They then go on and they create businesses which grow more rapidly than others, and they contribute hugely to our economy. So that's a good example of the kind of policy change which the government needs to make more of. Changes to our tech visa system to make it even more flexible would be welcome. And I know that's an area which Ron Khalifa has been looking carefully at.
And where does that fit into the debate around London's ability to hold on to stock market listings? And London for a long time has been viewed as the neutral venue, as people put it, to list in Europe. That is somewhat more complicated now since Brexit. Amsterdam is picking up listings that it might otherwise not have done, potentially. There is a risk that London loses that badge as a kind of gateway into Europe. But I guess, does this whole idea of keeping people in the country while they're setting up businesses, does that help in terms of taking us through that long process of getting to the point where they set up companies that want to list and all that kind of thing?
No, obviously that's a big help to bring the talent into the country to start with that has a greater propensity to start up businesses than the existing UK population. So hugely important to have that pipeline of brilliant people coming into the country through our university system. But that's just a small part of what these reviews need to do, obviously, to address the decline in UK listings. A lot of European countries have seen a decline in listings over the last decade, and there have been one or two standout countries, I think Sweden's among them, and Italy, curiously, that have seen growth in listings. And the UK does need to do a piece of work to examine why this has been happening, and that's precisely what Jonathan Hill's review has been undertaking. And there are, as you know, some specific areas of focus relating to the size of the free float and whether or not we need to amend the dual class share structure rules and so on and so forth. And there are doubtless sensible recommendations which Jonathan will come out with to ensure that the UK can compete more effectively for those kinds of fast growth technology, e-commerce companies that we've been missing out on a little bit because of the sort of the purity and the high governance standards of our rules. And that's obviously the balancing act which he has to tread. We want to ensure that London maintains its strong standing and good reputation for good governance. That's one of its strongest selling points. At the same time, we've got to put in place mechanisms to facilitate the listing of companies who are faster growth and are potentially attracted by the higher valuations that they can get on other stock exchanges around the world. It's a delicate balancing act, but Jonathan's a very clever guy, and I'm confident he's going to strike the balance.
I mean, a lot of investors that I speak to will say, listen, I haven't got anything against the UK per se, but the stock market is full of miners. It's full of energy companies. First of all, it feels quite old economy, and it doesn't have those kind of high growth tech names a lot of the time that people are looking for. Obviously, they've driven global stock markets, those sorts of names over the past year, but also it doesn't quite fit into an ESG agenda for a lot of investors either, when there are so many resources companies kind of gumming up the main indices. So I guess this process that you mentioned Jonathan Hill is going to be going through is going to be important for recasting the London market as something that's more suitable to the modern investment management industry.
Yes, that's right. Jonathan has got a big job to change the look and feel of the London Stock Exchange, and his recommendations, I'm sure, will want to address, that sort of the mix factor. How is it that we've got a market that's so heavy in banks, insurers, petro companies, miners, and so forth, and we do need to reflect more of the way global value added is located, in technology and e-commerce and science, as I was mentioning. So that is a big challenge. But you mentioned the whole green question, and that is of huge interest to Number 10 and to the centre of government right now.
Right.
Clearly, we have COP coming up next year. Ahead of that, the government has recently launched a plan to make London the global centre of green finance. So if you're looking for ways, to go back to the earlier part of our conversation, if you're looking for ways in which London is going to differentiate itself and to take advantage of its powers to regulate in its own interests, clearly listings, fintech, green finance, they're going to be very much at the heart of how this government demonstrates that Brexit allows us to do things differently and in our national interest. And indeed, with something like COP 2020, the COP 26 climate change summit, in showing that we are aligned with many of the key concerns across the EU and beyond as well. So I think the fact that the Prime Minister wants to make London the global centre of green finance should give a real boost to the city in terms of things like green bond issuance, where again, in last few years, we've been lagging behind other European centres in terms of our performance. We haven't set the pace when we were part of the EU in terms of devising a taxonomy for what is an ESG investment, what is a green investment. Now that we are in a position to do so, the Treasury has said, well, it's time we came up with a plan for that and demonstrated that we're capable of this kind of independent policy making of our own. And I think that's going to be a really interesting test case of whether the UK can regulate and set a framework in that way that's independent of the giant market on its doorstep.
And it does feel like the right time to do that, right? There is money flooding into ESG funds now, and a lot of these funds find themselves chasing a relatively small number of opportunities. So that the more opportunities we can put in front of the asset owners, probably the better.
Yeah,
but in terms of,
we're going to be a giant issuer of debt. I mean, with all the borrowing we've been undertaking over the last year, the UK is going to be a major issuer. And, if the government is true to its word, a very significant proportion of this is going to be in the form of green sovereign bonds. So there's a reason, given that our debt is considered still to be pretty safe, why London shouldn't become a major centre for green bond trading.
And in terms of linking up with other parts of the government's agenda, you mentioned the COP event that's coming up, but again, and also going back to what you were saying about the city's image problem, what role can the city play in the levelling up agenda that the UK has in spreading the country's wealth more evenly geographically around?
Yeah, first of all, levelling up can't mean levelling down London. That no one is going to get richer by bashing London. As a London MP for 10 years, this was an argument I had to make often internally within government. Tempting though it is to bash London, the fact is it's a massive generator of wealth and economic activity and taxes that subsidise the rest of the country. So we need London to thrive for the UK to thrive. What of course the city can do is to ensure that access to finance is fairer and more equitable, that we don't have these big capital gaps which we currently do across the country. So you're much less likely to find finance if you're in Teesside than if you're in Shoreditch, if you're a startup. There's a significant startup capital gap in the sort of early seed rounds. One of Ron Khalifa's recommendations is I understand, going to be to create a fund with regional hubs to ensure that some of that capital gap is narrowed. But structurally, we do need to ensure that access to finance is made less regionally imbalanced than it is at present, and the city has a crucial role to play in that process, especially in the growth stages of the corporate life cycle, where it's really in the sort of seed and Series A stages of funding that we see a very significant capital gap. And there's a very big role for government to play in that respect through agencies such as the Business Growth Fund and the British Business Bank, working with organisations like Tech Nation, and potentially the organisation that Ron Khalifa's review is contemplating establishing.
So do you think it's less about where these finance professionals are physically located for work, notwithstanding the fact that we're all at home at the moment anyway, and more about this access to finance element? I mean, it is interesting that, there's been talk of moving various financially focused parts of our civil service around different parts of the country. Do you think that's a serious prospect, and what kind of difference do you think it could make?
The physical location does matter. It does matter because you need to identify the individual companies who deserve access to capital who aren't getting it. And you can't really do that from London. You can't do it sitting in a lovely office in Mayfair or wherever. You do need to be regionally based, and to identify those businesses. I mean, that is just a crucial part of the sort of the origination work, which simply can't happen solely over. Well, it probably can happen to some extent over Zoom. But I think, the reality is you need to be getting out and about and seeing where the talent is and seeing where the good businesses are who would benefit from more capital.
So, fast forward 10 years, what do you think the city will look like, and what sort of proximity and cooperation will there be with our friends in Europe?
Well, I think the single market and servicing the needs of the European economy will continue to be an extremely important part of everything that our financial services industry does. But the reality, of course, is that that's going to be the slowest growth part of the overall basket of activity that the city undertakes. And there are going to be faster growing activities which may not have their origins in the EU. Obviously, the UK has over the past sort of decade become the major global centre for offshore renminbi business, for example. More than 30 Chinese financial firms have established operations in the UK over the past few years. The Indian economy, promises a lot in a 20-year horizon, and the UK, should have ambitions to position itself in an equivalent way for the rupee, and so on, whilst continuing, of course, to maintain its strong position in activities that service offshore dollar activities and other activities of that nature. So London's future is, as ever, going to be as an international centre, as an entrepot, as a hub, servicing economic activity wherever it is in the world. And our core underlying strengths, time zone, language, legal system, London being not at the moment, but normally a nice place to live, normally a nice place to live and work, will hopefully survive. So that's London's future. Is, as ever, it's permanently evolving to service the needs of a global economy.
You don't think its glory days are behind it?
No, I don't necessarily feel that. Obviously, we've put up a big impediment to our ability to service the needs of the of European business. Okay, we've done that because of Brexit. We've put a big barrier up in the path there, and that is going to erode, as you were saying earlier, some business at the margins, and we've lost share trading, and we're going to lose some other activities, and we're going to have to work doubly hard to compensate for those losses in other markets. But the City of London is full of unbelievably clever people, and government has always been confident that, left to their own devices, they can work it out. And I am too.
Well, I hope you're right. It's been a fascinating chat, Joe. Thanks for talking to us today. We're going to have to leave it there.
Thanks, Katie. Bye.